We are ALP Tech, and this is our advanced learning platform, a system designed to capture and interpret shifts in credit and market conditions. Our mission is to empower financial institutions with enhanced credit foresight for more informed analysis and decision using AI and alternative data. This will help them to fund the underfunded sectors such as small and medium and illiquid companies. On our radar page, credit risk and portfolio managers can view daily summaries of news categorized by sentiments, positive or negative, based on real time and historical data. By analyzing sentiment, they can review the key stories impacting the companies in their portfolio, grouped into positive and negative segment buckets. Our algorithm here calculates the size of the bubble based on the potential impact of the news on that particular asset. Our anomaly detection and reasoning feature highlights significant trend deviations in market prices, marking the positive and negative anomalies. These are linked to the recent news that may have influenced such changes. Clicking a marker opens up a knowledge graph, helping the users analyze the root cause and plan for similar situations in future. The credit curve page provides the bond prediction insights, and here the credit spread, which is the sign of credit quality for an instrument. With machine learning, we can forecast the movements of the less frequently traded bond. As you can see here for Apple, the algorithm uses AI and stochastic calculus to build a projected credit curve in red and then backtested with the real data in cyan. And you can see that the projection is highly effective. Using this kind of projection feature, a portfolio manager can value the less frequently traded assets as if they were fully liquid using natural language processing and AI. In this 3-month forward projection, user can simulate the future paths with Monte Carlo simulations, mapping past events to the current news. By aligning with similar news scenarios from history, the system projects trends and links these predictions to the credit quality for comprehensive risk assessment. We also have an AI-powered credit rating where users can view the latest S&P rating and also predict the rating using our model. As you can see here, our model correctly predicts the Citi's A- rating in 2021. And we can also use this model to assess the rating of less liquid companies which are not rated. And the example for that is here. As you can see, there's no S&P rating here, but we are able to predict a rating for this particular company. We also bring in current and future CO2 emissions of the company and analyze the impact of their net zero plans and the impact on the credit rating, allowing the financial institutions to provide cheaper funding to greener companies of the future. As you can see, the probability of default as a function of various different scenarios of net zero and delayed transition. Using latitude and longitude of the place where the bank has given loans to real estate company, we also calculated the expected loss due to hazards such as precipitation, drought, and fire, and we pull this data real time. Finally, our English to SQL LLM layer allows user to interact with the system in English without knowing SQL queries for querying. That's all. Thank you very much for considering ALP Tech.